Hello, everybody, and welcome back to another session of Anatomy of a Trade. I'm Franz Herr, and I'm here with Sensei Roman Bogomazov to talk about a trade that was done back in the summer session of WTC2 in Bitcoin by Aljaz. It's an intraday trade, a really nice trade. So, Roman, take it away.
All right, let's look at the trade and let's figure out what's going on here. Well, first of all, we are noticing the climactic action, and to the end there is a climactic volume, climactic spread, stop in action. And I absolutely kind of like okay with the automatic rally being what it is, how it's being shown to us. I would probably, just as a side note here, try to label as well. So this would be my phase A, so therefore local automatic rally, then the trading range, phase C, and then we go into a sign of strength, which is also pretty much local, right here, sign of strength, back up, and so on and so forth. But as I always say, labeling is overrated. Yes, you heard me correctly. Labeling in Wyckoff methodology is overrated. And if someone doesn't know how to define the dominant force and the price action behind this, and uses just labeling, it's a mistake that leads to frustrations and to students that come to us and they say like schematics don't work, and I tell them like they're not supposed to. All right, so that's such a big subject for me as a teacher, as a coach, as a trainer, to go through, but just my 5 cents right here, my 2 cents there. Okay, so then we're going through the trading range. There are quite a few changes. Please note this false takeoff, right? So what would be like a clue for us here that this is not good? Well, we would be comparing the takeoffs, right? So, and we probably would say there is more supply driven bar right here. It was supposed to overcome this high, it did not do this. And then right after, there is no immediate follow through above the resistance and we go down. So right away, again, a change of behavior and you're going into the third trading range structure. So you have 1, you have 2, you have 3 mini structures here. And the third one is definitely, somewhat favorable. I like how we're starting to operate here, Franz, because that happens after a second point of fear, which is this here, into the potential phase C. And I would even extend phase C and say like all of this testing is phase C, it's just a trading range. But the sprint is really well defined. First of all, there is very limited commitment to the downside. Before that, the background is that we had an attempt to rally. So that's also a plus. And then immediate recovery back into the trading range, into this level right here, into 1/2. So that's also pretty strong. So what a great point of entry right there, Franz.
Look at what a great job Aljaz has done here in picking this change in the whole volume signature too, where he's got this, the supply is increasing and then it's decreasing rapidly, and we just don't see any result from all of this selling. What are these sellers trying to do? Well, clearly they're trying to break support, they're trying to push price down, and no, that doesn't happen. We get just a really well defined, as you say, Roman, a spring that probably changes. I mean, here we are, we're coming into a trading range in a downtrend, and we're thinking, well, we've got to, if we're going to have a change in bias from down to up, we've got to confirm that. And this could very well be that confirmation. And in fact, it does turn out to be, and Aljaz identifies it just beautifully, Roman. So over to you.
Absolutely. And then after that, all of this, could be difficult. But again, remember, this is a 15 minutes time frame. You're going to go through this very quickly on the intraday. And you're confirming with the low volume signature, with inability to commit down, with staying in the upper part of this sprint action right here. So let's see what we do next. So we start moving our stop losses. Okay, so my question would be, when are we moving the stop losses? Are we moving them correctly? With WTC1 definition, okay, so here is your first move, here is your second move. And by the character of how the price moves, we are seeing a lot of demand coming in, so that's great. The character is way different than here or here, so that suggests continuation above the resistance. We overcome the resistance. right away we are noticing not just the big significant bars, but the extension as well above the resistance looks bullish. The test is upsloping structure. So again, T1 test, which is very favorable, has its own structure. The breakout is favorable as well. The test after that still favorable, so you're still holding on. And somewhat of the climactic bar here. So just going through the trade itself, stop loss, stop loss, stop loss, stop loss movement. In terms of the stop loss, the last big bar I would divide into 1/2 just because it's a big bar, and then allow my stop loss to be moved a little bit quicker here. So then your exit is going to be a little bit more efficient. But I absolutely love this stream because it shows such a climactic volume, right? So you kind of have to notice where that type of climactic volume comes. What does it mean? Some kind of stopping action, whether to the downside or potentially to the upside. So this trim, even though Al Jazz is saying here, trim too soon. No, that was a perfect place to trim based on the volume signature, based on the climactic run, and how it's been compared to the previous stop in action to the downside. If anything, if this is a swing trade that I'm in, I would be probably considering trimming more, like trimming like 2/3 of the position, and then having the mechanical stop loss at around this level at 1/2 of that big spread, and that would be it for this trade. Franz?
Yeah, I mean, that trim, he's thinking like a professional. A professional sells into strength, doesn't wait for the weakness to evolve after the strength, and just, really nicely done there. And I think just looking at this whole uptrend, it really sort of has the way that you teach, and it's beautiful because it's happening in a 15-minute time frame, but it's fractal to way all of these uptrends or downtrends develop. There's always the momentum stage, then there's the profit taking, vertical absorption stage, which is almost looking like a feather here, and then you get the final blast off of the speculative stage where everybody jumps in and thinking they're going to, and that's what's happening here. It's like classic. So just really picture perfect. Roman, back to you.
There is a mistake here with no add-ons, and I would most definitely think this way as well. So I'll just I see with students and myself, years ago, when you come to the level where it seems that directionality definition is easy, you follow the trade, and you advance in your trade execution, you become a better trader. One of the most common mistakes at that advanced 1, advanced 2 levels that I'm seeing from students and traders is not adding to the position. And Franz could attest to this. Like, I don't know, like 3 years ago, I was working on this myself. Like, how do you add to the position that is confirming that you're correct? How do you become a pig with sizable position where you are going to profit more? So for those of you who are advanced traders, please consider that, type of definition. Franz?
Yeah, great. Well, let's take a quick look at the post analysis here, Roman. The bias changed from down to up, and he caught it perfectly. So yes, there. The timing looks great right after the spring. The character definitely. Points of entry, yes. Stop loss, I'd give it a 50-50 just because the last stop loss, but other than that, I thought the stop loss movement looked really good, and maybe even 75-25. No add-on, so right on that. The trims, I concur with what you said. Yeah, and the exit was on the stop loss, so at least say 50-50.
50-50, yeah, okay.
But certainly a better score overall. So we're looking at 1, 2, 3, 4, 5, 6, 7, 8 possibilities, and we've got 4, 5, 6 out of 8. So our score, at least my score, would be 75% variance rather than 50%. And I think, the idea here that Al-Jaz is characterizing his mistakes, also his best practices, and using the feedback loop is all the part of the post-trade analysis that we're going over here, and how we use these going back over each trade that we complete to see what we're doing well, see what mistakes we're making, and work to accentuate the positive and put rules in place to prevent the negatives and mistakes from happening at least as frequently. So Roman, back to you.
Perfect. Last thought here. While in trade, devote yourself to it. That's the feedback loop. Love it. Absolutely love it. Be aware. Be in the moment. You are committed with the money. So this means that it's your responsibility how this trade is going to unfold. It's not up to the market what you are going to do. The market is going to do its own thing, but it's up to you how you're going to execute that.
And distractions can be killer. Do not get distracted. And that's what he's saying. So Roman, very much of a fun trade to talk about. Nicely done by Aljaz. Enjoyed it as usual. And until next time, everybody.
Thank you.